Today, Tesla tells its employees to make a tough choice. Plus, the insider trading investigation into Senator Richard Burr intensifies. And most Americans are still working from home, and the real estate market for office space may be in for a world of hurt. I'm MacKenzie Sigalos, and this is CNBC After Hours, Work From Home edition. Let's take a look at the scoreboard. We got a little whiplash watching stocks today. They posted a solid win after starting the day deep in the red. The Dow was down more than 450 points after some really ugly economic data came through this morning. Nearly 3 million more Americans filed for unemployment last week. But let's talk quickly about the scene stealer in today's roller coaster trading session, the banks. Financials were the best performing S&P sector today. Why is that noteworthy? Well, financial stocks have gotten crushed during the coronavirus crisis as investors worry about how possible negative interest rates, which Trump keeps pushing for, would affect bank profits, which make money on the interest they charge on loans. Even though they were the big winner of the day, financials are still the second worst performing sector of the year, down 31% in 2020. All right, and now for three of today's biggest developments in the global coronavirus pandemic. First, the World Health Organization has warned that it could take up to 5 years to get the COVID-19 pandemic fully under control. In a Financial Times webinar, WHO's chief scientific officer said a vaccine would be the best way to get a handle on the pandemic. But there are still a lot of unknowns about the safety and manufacturing capacity of global inoculation. To date, about 4.4 million people have been infected worldwide, and 300,000 people have died. In a separate media briefing on Wednesday, a different WHO executive said that the coronavirus may, quote, never go away. And second, the Wisconsin Supreme Court overturned the governor's stay-at-home order in a 4-3 decision, ruling it unlawful and unenforceable. The decision comes after Republicans in the state legislature filed a lawsuit last month, alleging the order would negatively affect Wisconsin companies and jobs. The ruling appeared to take effect immediately. Last night, after the decision came down, some state residents headed out to bars that had reopened right away, some without masks. Governor Tony Evers said the court's decision put the state into, quote, chaos. Finally, Tesla makes its employees choose. The company's HR boss emailed employees in California to say they may lose their unemployment benefits if they decide not to return to work. The email said that anyone who chose not to come back would no longer be considered furloughed and therefore may not be eligible for the unemployment funds that they had been receiving from the government. It went on to say the company would not retaliate with any penalties. This comes after CEO Elon Musk reopened Tesla's factory in the state earlier in the week in defiance of local county officials who had not yet cleared the company to restart car production. It's unclear if Tesla itself will face any repercussions for opening before getting the green light, but the company employees who may be at risk or unable to leave children at home might lose out. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves today.
It's never a good idea to force your employees under fear of losing their jobs to come to work. It doesn't produce the right outcome.
Look, there is so much doom and gloom, and this thing is not going to last forever. There's still loads of value in the market.
Women are overrepresented in the industries that have been hit the hardest. These losses will be sustained. And there was a white paper that came out recently that came to the same conclusion, that these losses will be persistent and they're not going to come back.
I don't own any stocks. I've told my colleagues in the Senate that at the very least it creates the appearance of a conflict.
Well, of course, I think it's right for all Americans to be able to invest in the stock market and build up that nest egg. I think that's smart. Congress already has a number of safeguards in place.
All right, the biggest question on Wall Street right now is when and how Americans can get back to work. The vast majority of states have partially reopened, with the exception of some hotspot states, especially on the East Coast. But that doesn't mean that millions of workers have returned to the office. Google and Facebook have already told employees that many of them are welcome to work remotely through the end of the year. And fellow tech firm Twitter just said this week that some of its workforce would stay working from home permanently. Companies that do plan on bringing people back to the office need to rethink the physical footprint. Now that we know that close contact in confined indoor spaces, basically the definition of most office spaces, present ideal conditions for the coronavirus to spread. This identity crisis gripping America's office buildings is weighing on the commercial real estate market and pushing it into a new direction. CNBC's Diana Olick has the details.
As the heads of major companies like Morgan Stanley, Berkshire Hathaway, and Twitter tout the viability of working from home long-term or even forever, some say it's still too early to write the epitaph on the office market. It will come back, but with some changes. More offices may move from higher density downtowns to the suburbs as jobs move out closer to where employees live. Companies may also be looking for more space, not less, as they reconfigure to accommodate for social distancing. And that, of course, will be pricey, but newer, more environmentally sustainable buildings could see increased demand, while the older, lower quality buildings could see less. That's all according to a new report from UBS. As for the health of the office market in general, a new forecast from CBRE predicts that after hitting about $35.66 per square foot at the start of this year, the average office rent will hit a low of $33.23 in Q4 of this year, then gradually recover back to current levels, but not until the start of 2022. As for vacancy rates, the average vacancy was at 12.3% at the start of this year. CBRE sees that as rising to a high of almost 15% in the first part of next year, then gradually recovering to current levels again by the start of 2022. Now, most companies, again, according to CBRE, will do a phased reopening of their offices. Just about half said they expect to give employees the option to work from home for the foreseeable future. This, of course, would vary widely depending on the sector and type of work being done, because not all work can be done efficiently remotely. The New York City office market could get hit really hard, as that is really the center of the pandemic right now. But eventually that office space will come back. And that's because so much tech has now moved to New York City. It had a lot of demand for office space before this. Also, as we get through this pandemic, employers still need for their employees to be able to work together, to collaborate. And tech companies were really pushing that before all this happened.
Okay, and before we leave, it's time for a numbers round. Let's kick it off with 1.7 million. The FBI seized Senator Richard Burr's cell phone yesterday after serving his attorney with a search warrant. The latest development in a federal investigation into Burr's conveniently timed stock sale earlier this year. Just 6 days before the stock market peaked in February, Burr sold off a sizable portion of his portfolio, worth up to $1.7 million. As chairman of the Senate Intelligence Committee, Burr had access to classified documents that reportedly contained dire warnings of the global coronavirus threat. Remember, it's illegal for members of Congress to trade on non-public information such as this. Burr maintains he did nothing wrong and made the sales based on public news reports. But today, he did step down as chairman of the Intel Committee for the duration of the investigation into his actions. Next, $800 million. The International Olympic Committee said it expects the delay of the Tokyo Olympics will cost up to $800 million. Earlier this year, the 2020 Games were postponed until July 2021 because of the global pandemic. The committee says it's working full speed ahead for next year and focusing on keeping the environment safe. And finally, 7,000. Delta Airlines expects to be overstaffed by 7,000 pilots in the fall, according to a company memo. For context, the company has around 14,000 pilots on staff, meaning 50% of the pilots would be redundant. Airlines have been among the hardest hit industries in the coronavirus-related market turmoil, as air travel basically grinds to a halt. So far in 2020, the XAL, which is the ETF that tracks the airlines, has fallen about 65%. Delta in particular has plummeted about 68%. That's it for After Hours. Stay up to date in real time with CNBC. Get the latest on the reopening of the American economy. Tomorrow, parts of New York State will begin to open their doors. and catch every development in this historic battle against coronavirus and the unprecedented economic fallout by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us then. Stay safe, and we'll see you next week.